To the gold prices, first of all, which have slipped to a 4-month lows in the international markets. On your screens, more than 0.5% of a decline coming in, extending losses for a 5th straight session, its longest losing streak in last 7 months. The fall comes as investors return to equity markets on higher risk appetite, denting the bullion's appeal. The Brent prices, in the meanwhile, also have seen a marginal decline in trade today. The prices have come off their $110 a barrel mark. The growth in Chinese factory data has revived hopes of healthy demand growth for the world's second biggest oil consumer. On your screens, as you can see, a bit of a dent on those prices. Let's get on board then. Vijay, who's author and CEO at BSPL. Also joining us is Ajay Kedia, who's MD and research head at Kedia Commodities. Vijay, hi, let's start with you first. And what's your sense really coming in for the precious metal prices? After more than 3.5% decline in the previous week, it has started on a tepid note yet again.
Good evening, Manisha. I would remain cautious on precious metals. I think the pressure still remains. The direction is still southwards, and higher levels will continue to attract unwinding. As we head into expiry of the 5th June series, I think the August series is clearly indicating that the 25,500 mark from the current 25,760 odd levels is not really very far away. I would expect a percent and a half decline in the coming 1 or 2 trading sessions, and higher levels of say 26,100. I'm talking of the August series rather than June. That level would invite fresh shots. The fact that open interest is rising tells me that the bears are now enhancing their exposure, and since the fresh shots are actually likely to exert downward pressure, I would seek equilibrium on the downside rather than buy on declines.
Ajay, what's your sense now coming in for the gold and silver prices? Where do you see a further decline and a more decline coming in?
Good evening, Manisha. If we see in last few days, almost 10-12 days, we have seen a sharp fall in domestic market to the tune of 1,500 rupees. In international also, we were seeing a choppy trade between 1285 to 1310, and as soon as we broke on that 1285 level, we have landed around 1246 right now. Domestically, we expect prices will be furthermore downside. We can see a drop towards 25,400 level to 25,200. No doubt, technically, market is showing some bounce can be expected ahead of ECB meet this week, but that bounce will be utilized for selling. That will be a good strategy for this whole week. We are expecting prices in dollar terms may test around 1220 or 1218. Whereas in case of silver, no doubt $19 was acting as a very good support previously, but as of now is trading well below $19. May see a drop up to 1840. But domestically, 40,000 was slightly good support we have seen from last 3 months. Market was holding that support. Right now it is well traded below 40,000. May see a drop around 38,600 in next coming 2 session.
All right, so we can expect further declines coming in for the precious metals, but there has been some support that we have seen come in for energy, while the prices are off the kind of highs that they have been taking in the recent days. But still, it's green on the screen for the energy space, and you also are looking at positive data that has come in from US and China. The corporate earnings have been positive as well. Vijay, looking at all of this, would you say that stability perhaps can continue for this?
Manisha, at this point in time, the way the industrial metals are reacting to the economic data available to us in the public domain, I think there is a marginal amount of optimism in the air. Now, sustainability of this optimism is a different question altogether. I think much will depend on what happens on the US dollar, number one. Number two, oil prices. These 2 factors will likely to be the major domo trend determinators for the commodities pack. If at all you see US dollar strengthen, and at the same time, although it sounds like an anomaly here, and at the same time if the crude oil prices, I mean WTI crude, was to strengthen from here, then I think industrial metals have a chance of further upsides, failing which I think the rallies will get sold into, and in the absolute near term, you might see a percent and a half, in some cases even 2% of a downside.
All right, so as of now, holding but not for too long is what our experts are saying. Let's also take a look at the base metal space, and that clearly has been holding on the higher side. Remember, the data from China also has been positive. The manufacturing, the PMI numbers have been better than what the street was expecting. And there you have a reaction on your screens. 1% up for copper on MCX. It's not just copper. If you look at the whole host of base metal sector, you have seen nearly a percentage point of gain coming in for most of them on LME as well. Vijay, how would you look at that? Would you say that after consolidation, after those strong gains that we saw for the month of May, June perhaps has started on a better note also?
The opening has been somewhat optimistic, and we'll need a lot of follow-up buying support in terms of prices rallying with higher volumes and open interest expansion. Now, open interest on that front, I'm seeing optimism. Now, at this point in time, it's a little premature to say that open interest is really giving you a lot of confidence, because for many industrial metals which have monthly derivative cycles, this is the beginning of the new derivative cycle. And obviously, the new cycle, you will see open interest build up, because the traders would have rolled over their positions from May to June. So in the next 2 or 3 trading sessions, I would want open interest prices and volumes, all three, to rise in sync. Then I would go out there and take some risk on the buy side, failing which I think it's just the cost of carry which is reflecting on the upticks on the trading screen right now.
Fair point that. Ajay, which metal are you picking up on for the longer side today?
See, Mallya, if you see whole base metal since last 1 month, the fundamentals for each commodity was totally different. Take an example of copper. Copper is still well traded below 7,000 on LME. On domestic market, no doubt we may see a jump around 420 or 422 last time what we have seen, because of good supportive data from China. In other metal, I think zinc will be the good pick, because some deficit has been reported, and also some producer has reduced their output. Maybe because of that, prices is well supported on 120 level, above 120 level. May see a jump around 126 in case of zinc. Whereas in case of nickel, no doubt fundamentally since January we have seen a good run up by near to 40%. Due to Indonesian ban news. So maybe that nickel prices once again can test around 1200 level.
The monsoons have missed its date with Kerala this time around. The IMD has said that the rains will arrive over the region by 5th of June, though this could be delayed by nearly 4 days before or after the set date is what they have also said. The onset of southwest monsoon over Kerala signals the arrival of rains in the country and represents the beginning of the rainy season over the Indian subcontinent. But all is not bad news. While the monsoon may be delayed, conditions are becoming favorable for further advance into some parts of Southeast Arabian Sea, Maldives, Comoran area, and some more parts of Southwest Bay of Bengal over next 2 to 3 days. Take a look at the agro-commodity prices then, and we have seen chana prices continue to decline as reports suggest that the speculators are trimming positions amid weak domestic demand against higher supplies from the producing areas. There you have more than 3.5% of a decline coming in for the chana prices yet again today. And the declines have also continued for the sugar prices, which the pressure has been mounting because of higher stocks followed by increasing supplies from the mills there. On your screens, 0.25% decline coming in for that too. The wheat prices also have declined on profit taking in the futures as the spot sees higher supplies from producing states. There also have been reports of increase in procurement of the grain, which has increased by 8% to 266.68 lakh tons till time. Remember, the last year procurement from government was at 250 lakh tons. In the global markets as well, the wheat has declined for a 9th straight day on good sowing progress in US and Canada. In the international markets, the wheat prices have declined by 13% for the month of May alone. Let's get on board then. Veena Sharma, she's Secretary, Roller Flour Mills Federation of India, and she joins us on a phone line from Delhi. Veena, hi, welcome to the show. It hasn't been such a good time for the wheat prices globally or for the Indian markets. What's your sense, first of all, on the prices?
As a matter of fact, we do expect a big crop this year, and the price policy the previous year has helped the private traders procure, going for more procurement for their requirement. Even the traders are holding it back. The year started with a good note, as we had to buy wheat earlier at 1,500 plus, and the fresh crop was available at 1,400 plus, which was a good sign for the trade and the millers to buy on. The reason is, again, we have a big crop and a big procurement target by the central government, but still the private trade active participation has held up, controlled the prices both in the open market, ensuring better availability and lesser pressure for the government to procure in.
Veena, also, what is your sense on the procurement amount, quantity itself? Because we are nearly 8% more than what the government had procured last year. Do you think that's another thing that would put pressure on prices?
I have my doubts because they had a higher target and a lesser opening stock this year as compared to the earlier year.
Okay.
But again, the price structure, total sale policy by the central government and active participation from the private trade has all contributing to the present wheat scenario and the price factor that is being monitored in the open market.
So what's your sense now then for the wheat prices going forward from here? Because there has been a decline.
It is going to decline further because the traders are not very keen on holding it up as they don't expect much of the profits coming in.
All right, Veena, we will let you go at that. Thank you so much for joining us and sharing with us those thoughts. Vijay, what's your sense though on charts? How are the wheat prices looking to you? Because it has been a gradual but a steady decline.
Absolutely, Manisha. This is in line with what I've been saying. In the absolute near term, you will see further erosion in staples, in pulses, in even sugar. And on the near-term charts, prices are now approaching the oversold levels. I would not be surprised to see wheat either test or marginally breach the 1500 round figure mark in the prompt month futures on the NCDX. And only by middle of June, when you have a clearer picture about the monsoon, you have a clearer idea about what the El Nino is likely to impact monsoons by, will you really see a bottom, if at all, formation being made on the charts. At this point in time, it's fraught with risk to short any kind of food grain. At the same time, it's a little premature to go out there and start investing on the long side. So I would still wait for at least a fortnight, if not longer, before taking a call on the long side. My inclination is to buy the declines probably as deep as possible on the decline side, rather than short any kind of an upthrust.
Ajay, how would you look at the pulses space? Because that's another area. We should get the weekly and monthly chart on chana surely. Because today we have seen more than 3% of a decline coming in, and the commodity actually has seen a decline on a weekly, monthly basis as well.
See, particularly China, if we see last month we were trading around 3100, and since then we are continuously under pressure, and today also it has dropped by nearly 3%. See, overall arrivals was quite good in a later phase, and also it is expected that government estimate has already shown the production is quite good. That is why market is no doubt fundamentally for long term looking to the El Nino factor will be impacting whole crop. Overall agri product, so definitely prices will get support, but as of now we expect prices may drop down towards 27.50. That will be a good level to retake or regain prices from that level.
Vijay, what's your sense on chana? Because this is a commodity that has been falling much more than what the markets anticipated.
Absolutely right, Manisha. And I would still wait to initiate long positions. I would not want to short chana. And the way the volumes and open interest have shrunk a little bit in the June month futures, it looks like the traders are showing signs of caution here. Now, when caution is in the air and the closing for the day is close to the intraday low, I think you need to wait and watch and possibly see if the 2,700 mark is being breached in the June month futures. If at all it does, I think further downsides should not be ruled out. In any case, your buy focus should be either July or August month futures, that too close to 2,700, if not substantially lower. So here again, I would monitor the prices in the coming fortnight or so, and then seeking out a buy opportunity at declines.
Vijay, also, how would you look at the sugar prices? Because as you mentioned, most of these essential commodities have seen a lot of pressure.
Relatively speaking, sugar has fallen less than both wheat and chana, with almost 1/5 of a percentage point decline on the NCDX. Now, sugar here, I would seek buy opportunities at 2850, maybe 2900 in the July, if not August future series. And I would still wait for another fortnight just in the case of wheat and chana before taking a call. I don't see a decline below the 2,700 mark in the coming fortnight or so.
And there are those flashes on your screen from the food minister who says that they must assess internal demand before food grains exports. Any step is taken onto that one, and they have called for a food colleagues meeting as well, and they have called for a sugar policy meeting too. So that's the latest coming in from the food ministry. Remember, we hadn't heard much from them except on that they have a contingency plan on monsoons, and inflation is still a concern. This, of course, is the latest coming in from the Food Ministry, that they also are working on the guidelines from the Prime Minister, that they are assessing the internal demand before the exports, any call on exports rather is taken on.